Welcome back to the second half of the Future Show here on the TD Ameritrade Network. We're less than 60 minutes away from the cash open for stocks on Wall Street. We have some breaking economic data to help us discuss. Scott Bauer, the CEO of Prosper Trading Academy, joins me. Scott, welcome. Thanks for giving us part of your Tuesday morning. It looks like, good morning. It looks like kind of mixed data here. I noticed the export prices came in a little bit above expectations, imports a little bit below expectations, and it looks like the New York manufacturing survey actually slipped a little bit, came in at 4.90. Talk to us about what you're seeing here. Again, maybe not the most closely watched data points here to begin the week as far as economic data with the Fed and everything, but your thoughts initially.
Yeah, you know, if you grade the importance of these reports, these are probably like a B minus, C plus in terms of how relevant they are. Yet they're a little bit disappointing. So, you know, we don't want to keep seeing, you know, disappointing news on top of disappointing news. But now it's really on to the Fed. So definitely something to watch, especially I think the Empire number, the New York manufacturing number, which was significantly weaker than expected. I think that's definitely something to watch for a trend, but it's for sure on to the Fed right now. And, you know, what are they doing with bond purchase program?
Is that really what it comes down to, Scott, at this point? I mean, I'm hearing, again, that nobody really expects that they're going to move rates, but potential some tweaks to the asset purchases.
Exactly. That is what it is. Are they going to extend it? Are they going to extend it both in length and the amount? Are they just going to keep things the same? Rates are going to stay the same. But, you know, it is a key focus right now because it's not just our Fed. It's really central banks across the world right now that are doing a lot of tweaking, if you will, at this point.
Scott, ultimately, where does this leave the dollar? Because it did show some signs of weakening headed into the beginning of the week. We posted a new low, continues on the trend that we have been seeing to the downside. Now, it was short-lived, albeit it seemed to come back with the indices selling off a little bit, the first kind of flight to quality type reaction we've seen in a little while. But what does this mean for the greenback?
I mean, there's still heavy pressure, quite frankly, and until the stimulus, you know, talks are finalized, if they ever will get finalized, there is going to be continued pressure because any further stimulus is going to be a very big headwind for the dollar. So right now, you know, hovering near those April 2018 lows, and I don't really see it climbing out of this range here anytime soon.
Yeah, the dollar doesn't really have much to lean on here either when it comes to rates. I mean, again, with the Fed, as you mentioned, not expected to do anything in terms of a change there. But not only in terms of this meeting, we're talking potentially years out into the future as well.
No doubt about it. Again, it's not pinpointed here just what's going to happen to the end of 2020. The Fed has already said, you know, this is ad infinitum, that they're going to keep this on pretty much into the near future meaning 12, 18, 24 months.
Scott, let's talk a little bit about some of the other numbers that are headed our way, because it's not just the Fed this week. We actually have a couple other central bank policy decisions. We're talking the Bank of Japan, also the Bank of England. I mean, one could argue very difficult a sort of road for them or a path for them to navigate at this point. I mean, there's a lot of uncertainty in terms of where things will be in a few months with the vaccine rollout, how well it goes and proceeds. I mean, ultimately, things could get really good from here on out if we have progress on that front and no real hiccups or major speed bumps along the way. But ultimately, again, a lot of unknowns, I guess, is the point here in terms of what these central bankers have to navigate.
A lot of unknowns, and I wouldn't be surprised to start hearing some language, though, about cautious optimism.
Okay.
You know, we've kind of heard the opposite of that for a while.
Yeah.
But now that the vaccine is here, we don't know how quickly it's going to really affect the economy. We all hope that, you know, kind of maybe that 3 to 6 month window is when we can start seeing things, you know, progress a little bit. But I think that they might use some cautious optimism in their terminology. In terms of other central banks around the world, you know, it's a pretty similar situation. Economically, we probably stand a lot better than many other countries, though some of the news that we just recently saw out of China wasn't too bad, actually, on some of their retail sales. But I think we're going to see continuations around the world of bond repurchase programs, more stimulus. I mean, that is certainly the game, at least for the next 3 to 6 months, Ben.
Yeah, it sure seems to be. Let's talk a little bit about Brexit and some of the recent activity there, because this is also a focal point for many. Bank of England also certainly is dialed in on this. You were talking about some of the activity in the other countries. This is certainly a potential market mover here in the coming weeks. And I mean, we've got the deadline at the end of the year, a lot of back and forth, but still nothing as a result in terms of negotiations.
I guess the question is, do we really have that deadline? I mean, how often have we, had the discussion of a deadline and then just to see it postponed and kicked down the road a little bit? So the pressure is on again. There's no question the pressure's on. And, are they going to come up with a deal, or are they going to extend it again? I don't really know, but based on past history, it certainly would not surprise me to see that deadline get extended maybe to the first quarter of 2021. But there is a lot of pressure on the pound. There's a lot of pressure on the euro, even though we've seen, some rally in the pound. But yeah, it's really up in the air. There's a lot of risk to that region, and quite frankly, to the currency if they do walk away, if there is no deal.
Yeah, I want to pull this chart up. We were just looking at the euro, and you mentioned some of the pressure that the pound has been feeling. I've got the pound here now on the left. You can see how it's been struggling to get up above that 135 handle with anything. Yep. Any real follow-through, at least at this point. You can also see how we can just sort of zoom in on this, how it's been a bit of an area where they've struggled with in the past also. So something to keep an eye on there. We've got some other currencies that have been on the move as well, not just the British pound. We were taking a look a minute ago at the Australian dollar. New Zealand dollar also has been strong. Canadian dollar, for that matter. The Swiss franc, Scott. I mean, you can see why the greenback has been under pressure, to say the least. I mean, this is a trend, not just one or two of these currencies. I mean, ultimately, we've been hearing about how higher currency impacts some of these other countries and, it weighs on those prospects for inflation. But certainly, this is a force to be reckoned with for many.
There's no doubt about it, and especially when you mention in the Far East, talk about the Aussie dollar, New Zealand dollar. They have been strong. They've been as strong as they've been quite a while. They backed off some of their recent highs here. But yeah, it's across the world, basically. The dollar is really, I don't want to say taking a back seat, but many other currencies here have shown an incredible amount of strength versus the dollar, and that probably continues in the near future here.
Yeah, this move off the lows has been impressive. We're looking at the Aussie dollar on the left here. You've got the New Zealand dollar on the right, and we've been dialed in on this move in the 6N up and through the 70 even level. We were talking about the bid activity and taking note of it into and through that level, I should say. Scott, real quick, I wanted to just talk treasuries and rates, because we did kind of touch on the fact that the Fed wasn't expected to do anything in the near future, but there was a fair amount of attention being directed at this 1% level. There's also been the steepening of the yield curve, which is kind of feeding into that narrative as far as what we were talking about, strength in not only here in the U.S. but globally, and expectations that, well, the Fed, as you were mentioning, maybe not necessarily ready to pull the punch bowl away, but maybe whispering that final call kind of mindset that they could potentially be getting into, and only whispers, as you mentioned. But ultimately, I mean, we're still in a scenario where rates right now, the TNX focused on the 1% level, but how big of a deal is it if we were to get up above that? I mean, it's more a rate of rise and extension and follow through and some of the others, right? It's not necessarily the line in the sand, so to say.
Absolutely. It's a psychological number. It's a big number, but it's a psychological number. We haven't been above, 1% in quite some time here, and everybody kind of looks at it because it's one of those big round numbers. It would be a significant move, but it would be a matter of, can it sustain above that? And I just don't, I don't think that's in the cards in the near term here. So if the Fed does start to turn a little bit optimistic here, you could see a push towards that 1%, Ben. And that steepening of the yield curve, though, I look at that. I think that's a really good thing. I think that's part of the optimistic, outlook that we can kind of give to the economy right now. And maybe that's the start of really good things to come here.
Is it potentially the start of a slowing in the housing market, though, Scott? That's been one of the real pillars of strength that we've been talking about. And one of the contributing factors to that has been lower rates.
It certainly can be, and many people have short memories. I'm included in that, right? If we look historically at mortgage rates and the home buying market, if rates were to go up, if they were to tick up another, tenth of 1% or, whatever it is from here, there could be a mad rush towards even more applications here. And if you think about historically, those rates are still historically incredibly, incredibly low. Are they where, we were 6 months ago? No, but it's certainly something to watch for that, home builder and home buying market, because that has been the incredible strength of the market overall for the last, 6 to 12 months, maybe even a little bit longer.
Scott, what's on your radar screen as we head into the end of the week, aside from the Fed and some of the other topics we've covered, and into the end of the year for that matter?
The big topic outside of the Fed this week is obviously the rebalancing both in the S&P and the NASDAQ space, which could add some volatility. A lot of people talk about quadruple witching, which happens 4 times a year. And in this day and age, Ben, it's not like back in the day when, we were trading on the floor and there weren't necessarily weekly options and daily options in terms of volatility. So it's a big day, quadruple witching, but I don't think it's as volatile as it used to be. But to me, this rebalancing, maybe even more so in the NASDAQ space than in the S&P this time, even though everyone's talking about Tesla and the massive amount that it's going to bring, to the S&P. I think that's got to be on the watch just to see what happens. We get beyond that. This is the final week of the year of full trade this week. So we get beyond that. And then starting next week, we actually may see volume, start to dip down just a little bit here. And that might be the start of the Santa Claus rally that everybody's hoping for.
I like it, Scott. Really appreciate you joining us here and helping us take a look at the economic data. We were talking currency markets, treasuries. We've got into the Fed a little bit here, and the week ahead into the end of the year. Scott Bauer, thanks for sharing part of your Tuesday morning with us, ladies and gentlemen. Scott's the CEO of Prosper Trading Academy, and we've been talking fundamentals. So